All right, ladies and gentlemen, hello. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Friday, ladies and gentlemen. Right? Should have been the NFP day, but look, everything is canceled. Right? The whole show is canceled, and well, the market is kind of searching for the next big thing for today, at least. There is this next little big thing, which I'm going to talk about in a bit. So just before we go any further, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. So like I said, today is a little bit of a disappointing day. I would say, kind of everybody was looking forward to the number, but yeah, it's not going to happen. Also, just before we jump into the charts, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, so this is going to be like a very quick overview. I'll try to be as quick as possible. Basically, the economic calendar is very, very calm today, apart from the composite and services PMI numbers that came out from Europe. So and Japan, if I'm not mistaken. Yep, but also Japan. Yes, there we go. So Japanese data came out kind of a little bit better, I would say, better than the forecast for sure. In some cases, even better than the previous. Then we got the European numbers. Basically, the German composite and services PMI came out on the higher side here. I can see on the higher side comparing to the previous, but the worse than the forecast. The same story with the composite, worse than the forecast, but better than the previous. So in a way, not bad, I would say. Eurozone in general, still better than the previous figures, yes, but not as good as the forecast. Well, actually, very close to that, to be honest. UK was a disappointment, to be honest. Here we go. Very close to contraction, especially on the composite side. Okay, let's see how they deal with that. Your PPIs, the year-on-year European PPIs came out, even worse than the forecast of minus 0.4. It came out at minus 0.6. Okay. Anyway, that is this. And of course, like I said, the unemployment rate, this is what we were expecting today. The non-farm payrolls, there we go, the 50 expectation for a 50K against the 22K. Look, in the beginning of this this week, I did a little video here. You can check out the U.S. job numbers are not painting a positive picture. So I think this video is a little bit of an update to this one, because here I still didn't know that the government will shut down in a way, and we're not going to be getting the data. But what I wanted to pick up on what other job numbers that we got this week. So we got the JOLTS this week. Let me just show you what I'm talking about there. The JOLTS came out better than the forecast, if I'm not mistaken. Let me just double check. Where's that JOLTS? There we go. JOLTS job openings came out at 7.227 million against the forecasted 7.2, and better than the previous. So in a way, I would say yes, great, wonderful. People were happy about this. However, somehow, whenever we have a problem with the NFP, the next big thing, the next best thing is the ADP. And ADP, honestly, just confirmed that there are issues. It just confirmed what I was talking about in this video here and on Tuesday, that there are issues. There are major issues in the U.S. economy because, look, the job creation, right? Yes, nobody's firing. However, are they creating more jobs? No, not really. ADP, where's that ADP? Let me just show you what I'm talking about here. ADP, my scroller doesn't work for some reason. ADP employment change, there we go, minus 32K against the forecasted 50K. Now the 50K was already a kind of an embarrassment, but even the previous got adjusted. It got adjusted to minus 3K. I mean, it was a positive 54K, if I'm not mistaken, and it got adjusted to minus 3. So basically showing that it's the third time this year that we are in negative territory on the ADP. Look at this. Where's that year? Where is it? 2025. There we go. It's like once, twice now, and now the third time we came out in the negative. Of course, don't get me wrong. The minus 32 will get readjusted. Will get adjusted next time, next month. But still, this is an issue. I think that the Fed needs to, I mean, well, of course, we understand that they're going to go for a rate cut, and they need to consider this very carefully. The question for me actually is, they're planning to do one cut, but now the market is kind of talking that, hey, maybe we'll get something like of a two cuts in October, because of the severity of this issue. And in this case, with the labor numbers, with the ADP figures, yes, it was a disappointment. Of course, it's too bad that the NFP is not coming out, but something tells me that that number probably was also expected to come out in negative territory. So maybe all the stars have aligned perfectly so that we wouldn't get like a market sell-off on Friday, basically today. So no data, no worries, right? Look, at the moment, somebody might say, but hey, look, doesn't that mean that the Fed will go for maybe for more cuts, and that could boost the economy a little bit? In a way, yes, but if imagine this, if the NFP would have come out like in a negative territory today as well, I mean, that would, yes, the two there. Let's say, yeah, the chances for two rate cuts in October would increase, but would that not actually spook the market? Because the market is already at all-time highs. Everybody's kind of in this mode where should I take profits or should I keep it running? Let me show you. I'm looking at Polkadot here, but let's jump into the Dow Jones Industrial Average. Look, since the beginning of this year, this is what I was talking about this morning in my Markets Talk webinar, which you can actually always check here. It's in the live section. This is what I did this morning, so you can check it out. But look, Dow had a good run this year, around 9% so far. We're knocking on the door of the current all-time high. The S&P did already the all-time high. Nasdaq also created an all-time high yesterday. Dow Jones, it seems like it's the turn of the Dow Jones now, unless it fails to overcome this barrier. And if it does fail to overcome this barrier, to me that could be a little bit of a worrying sign. And like I said, this is where the kind of the thin line is, that yes, bad numbers mean more support from the Fed, potentially more rate cuts. However, at like to what extent, to what how much further, let's say, the market can actually feed on this. Look, I think that there still is room for some upside. In my opinion, till the end of this year, I think that the market will just kind of ignore everything and just continue on the fact that the Fed, is going to support the economy and blah blah blah. My issue is that, look, we're going to be getting into the earnings season very soon again. So let's say J.P. Morgan here. When's the earnings coming? When are the earnings coming out? So this is Q3 earnings coming out mid-October. Let's say what's happening with Nvidia. Nvidia is going to be a little bit later down the line. Yes, that's going to be November, yes, November time, mid-November. So we're going into this like between mid-October and mid-November, this period when companies will be reporting their earnings. Let's say the same story here, October time for Microsoft, Meta. Let's take a look. All the tech giants here, October time. Yep, at the end of October, they're all reporting earnings. And FLX and Netflix basically, and I want to say NFLX, difficult one, but yeah, these guys are also going to be reporting. So a lot of companies are reporting at the end of October, beginning of November, mid-November. So keep your eyes on that, and it's going to be very interesting. And if those companies suddenly start, let's say, showing bad results or something like that, then that's where the stock market could actually, shift gears and kind of, or not even gears, shift direction. Make a U-turn. So again, I'm not, like I say, I'm not trying to be very pessimistic here. For now, I am sticking with the trend. The trend is to the upside. I'm sticking to that. However, the problem still remains. Job creation, There's little to none, right? And of course, everybody's now in tech because everybody's like pouring money into AI. Open AI got like valued like one of the top startups in a way. So I think that maybe they're trying to cash out a little bit of money. Anyway, the AI thing is a good thing from the company perspective because you can cut costs, but the main thing how you cut costs, you cut heads, right? So especially on the junior entry level roles, now AI can do all that. And hey, that's why we're not seeing job creation. We're not seeing unemployment going higher because still the jobs are remained or maintained still. The only thing is that we're saying that some other big companies are promising now to go for those cuts. Like for example, in Europe, Lufthansa is going for 3 or 4 thousand to cut jobs. Let me just double check. In the news, it was 4,000 jobs there. To slash 4,000 jobs, and they're going to shift to AI. So there we go. So fourth, that's not a lot. I mean, that's not a small number. So you're cutting jobs, and I think that the problem is this whole AI thing. Yes, it's a new progress thing. And somebody will say that we were industrialization and blah blah blah. Yes, in a way I agree with that. It's like we are going through this new period where people are going to be needed, and people will have to shift somewhere else or shift go in a different route. It's going to be painful, yes. It happened before, it will happen again. The fact stays the fact that it is a bad thing. So it's so you might get this little shock in the economy, and like I said, I'm going to be really interested to see where this is all going to go. We're all going to be interested to see where this is all where it will go. But for now, we're seeing the market rallying. Everything is pushing higher, and eventually, look, don't get me wrong, this will have to end. Looking at this S&P 500 here, looking at the monthly chart, this is very, very steep. This is like very, very steep, and whatever comes up must come down. So will it be October time that we will shift a little bit to the downside here, or actually are we going to go continue rallying here? I'm not going to say anything yet. I would say I'm a little bit on this bearish side overall, but don't get me wrong. I have to admit I cannot go against the trend. So while the trend remains, the way I can play this game here on the S&P, for example, is if we go for if we clear, let's say we already cleared the September high. If by any chance we go higher in October, but then at the end of October we start shifting back down and we fall back below the September high, ooh, now that for me would be a little bit of a bearish indication. The same story for NASDAQ. And NASDAQ, I think, will be the first one who will drop, which will drop. So just because, again, something will come out, everybody will start dismissing technology and stuff like that, or some sort of issues will arise. And then we'll start seeing correction lower. But at the moment, yes, everybody's rallying. Nikkei is also like near the highs and near all-time highs, and I think is going to go higher even. But don't forget about the election, the Japanese election, which is coming out this weekend. So if you are exposed to something Japanese like the yen or Nikkei, just maybe better get rid of the positions before the weekend. Anyway, look, ladies and gentlemen, like I said, we are at a very interesting spot right now. Unfortunately, we're not gonna get the NFP number, but what could be the market driver today? It will be the ISM. The ISM will still come out. The current where is that? No, not this one. I'm looking at looking at the wrong ISM. The ISM Services PMI figure right here. There we go. The expectation is for a slightly lower number, but still in expansion territory. If this comes out somehow very close to 50 or maybe even slightly below 50, ooh, now that could be a bit of a shakeup. Now, this is, like I said, this is where the interesting bit could come in. Yes, bad news right now is good because we're, expecting more cuts from the Fed. However, I don't know. Like, I mean, I could actually consider a reversal here back down, and a little bit of profit taken, off the table. But again, like I said, I'm not rushing into things. Maybe the ISM will come out on the higher side to kind of support the economy because um, we had like bad news from ADP. So, in order not to create that fear, maybe the market should not, nobody needs the market to correct lower now. Maybe that's a little for something for a little bit later. But hey, let's see. Like, keep your eyes on the ISM. Basically, that's the final thought here. Keep your eyes on the ISM today due to the absence of the NFPs. This could be a market mover, and we'll go from there. Ladies and gentlemen, I hope you found it useful. Let me know in the comments if you agree or not. And thank you very much for watching and listening. As always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. I'll see you next time. Bye bye.